Hi, Jen and John here with the Genuine Home Experts. If you're selling or buying a home, you've probably heard about seller credits, but what are they and why are they great for both sides? Let's break it down. Seller credits are financial incentives sellers offer to help buyers with costs like closing fees, repairs, or reducing mortgage interest rates. These credits don't lower the sales price directly, but they do make the home more attractive and can help sellers get full asking price in a slower market.
One common type is closing cost credits, where sellers cover fees buyers typically pay at closing, making the home more affordable. Then there's repair credits, where sellers offer funds instead of fixing issues, simplifying negotiations. Lastly, there's the interest rate buydown, where sellers reduce the buyer's mortgage rate for a lower monthly payment, which is a huge advantage in today's market.
Keep in mind though that there are limits on how much a credit sellers can offer based upon the buyer's loan type, so just check with your agent or lender. We also have a detailed video on interest rate buydowns, so take a look at that one as well. In the end, seller credits can help buyers save and sellers can sell faster without cutting their price. It's a win-win for everyone.
If you found this video helpful, like, subscribe, and share. Reach out if you want to learn more about seller credits and how they can work for you. Thank you for watching.